Guys, welcome back to another video. And if you are new to the channel, I would really appreciate it as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is you'd like me to cover in my next video. Today we're going to take another look at the US oil because it's probably one of the most interesting commodities that we currently have, with the tension going on between Russia and Ukraine. And the reason why oil prices are skyrocketing at the moment is because of, investors are expecting the worst but still hoping for the best. Now, um, so we're going to look at some order flow data as well as some fundamental data and technical data. Now, we're going to look at the technical data first. Now, starting on the monthly time frame, what do we have? Firstly, we can see how the market had printed this very strong level of resistance. Now, resistance got broken. It then became support. Support did not hold. The market then broke below that, created an equal low, came back, tested it as resistance. Then the market broke above that, created this long green candle, then broke above that, created new resistance, and the market is now currently trading above that area as well. Now, if you drop down on the weekly time frame, what do we have? Now we can see how on the weekly time frame, the last structural level that the market had created is sitting right over here. Now, if there's one thing that I've learned when it comes to fundamental data, driving the the stock markets or any market in particular, the pullbacks doesn't happen as it is supposed to. Like, you might think, if you're a price action trader, you might think, I'm going to wait for the market to pull back and then start looking for buying opportunities. Last week when I spoke, I said that we can't expect the market to continue higher. So the market was printing this candle, and I explained all of the reasons for why we could potentially see the market go higher. It doesn't necessarily mean that the market cannot drop all the way down to hit this level and then continue to the upside. And we are going to look at all of the reasons why we could potentially see that pullback before the continuation to the upside as well. So last week when I told you guys to take a buy on here, the market was sitting at this level, and I explained all of the reasons why we can expect the market to go and hit that $93 a barrel, which is exactly what the market had did. So the current price action that we have over here is, we can see how the market had broken above this level of resistance, and it's now testing it as support. Now, there's two ways that we are going to go about the situation, because why? All of, the price of oil rides on the back end of the current tension between Russia and Ukraine. Now, Russia is still, just hovering around Ukraine, and the war did not start. Now, if there's one thing that we have to take into consideration there as well, okay, is that Russia basically is one of, well, they are the fourth largest energy user. Russia produces an average of 10.83 million barrels of oil per day. Um, so that means that it basically produces 12% of world's oil and has a similar share of global oil exports as well. Okay, so what that means is that if Ukraine invades Russia, so the first thing that we have to understand over here as well, okay, with, you know, and I'm sure you guys know how this works. When supply is low and demand is high, the prices go up because there's a high demand for a certain product. And we know that, as with any commodity, stock or bond, that's how the law works. Supply and demand, because of, and that causes oil prices to change. When supply exceeds demand, the prices will fall. And what that means is that when people, when there is too much of something and nobody wants to buy it, the prices tend to get weaker. But when the demand is high and the supply is low, prices tend to increase. It's like the cigarettes that people used to sell back in South Africa when they started introducing the COVID, the protocols, and no smoking, and they started banning cigarettes and all of that stuff. So the supply for cigarettes was quite low, but the demand was high, so people could sell it at any price. Because Russia holds about 12% of the world's oil reserves, what that basically means is that if they continue with this war, the US is going to interfere. And what Russia can do basically is they can just cut their output supply to the world and say, you know what, we no longer want to supply oil to anyone else, and that's a 12% loss. So that basically means that the US oil, the supply, well, the demand for US oil will increase because 12%, well, the world's fourth oil supply, which is Russia, is no longer providing oil to everyone else as well. So everybody is going to go to the US oil to want to get that oil. So the demand is going to be quite high, so they can price the oil at any given price that they want to. So this move to the upside that we can expect over here for the US oil to go and hit $100 per barrel is purely based on the fact that if and only if the Ukraine, or if Russia starts this war and they actually go ahead with it, then we can definitely expect this move to go to the upside here as well. Now, today we saw that Ukraine calls for a meeting with Russia. Now, this is the fundamental data that we are looking at. Now, it says here that Ukraine calls for a meeting with Russia as US warns of imminent attack. It says here Ukrainian foreign minister Dmytro Kuleba said on Sunday evening Ukraine had requested a meeting with Russia within 48 hours. That also says here the US National Security Advisor Jake Sullivan told CNN on Sunday that Russian attack on Ukraine could happen this week as well. Now, if there's one thing that I've learned a long time ago, anything that comes from the White House or anyone that is in the White House that says anything, it's kind of hard to believe them because they already say that inflation is at 7%, but we all know it's sitting at 15%. So until there's actually actual signs of the Russia invading Ukraine, when you actually know that all of these stuff are happening, then we can see the price of oil going hit $100 a barrel. Now, what is that going to look like? As soon as we have concrete evidence that they are invading the Ukraine, then this move is highly anticipated. But other than that, we can expect the market to break below this level, then come for the retest and then continue lower, creating this head and shoulders pattern, which will be considered a bearish pattern from a technical perspective as well. So basically, we're all just waiting to see if this is really going to happen. Now, the next thing we are going to look at over here is um, the the order flow data, so the commitment of traders, and this tells us what the big banks and hedge funds and institutions are doing in the market. I can see here based off last week's report, which is quite interesting. Hedge funds came in and they first closed 10,000 of their long positions, intending to sell the oil, and then they changed their mind very quickly, adding 3,083 buy positions. Then they also closed 571 selling positions, and we can see how the overall net positions for the US oil had increased significantly as well. Now, this move will 100% depend on whether when this move is going to take place. So we are literally waiting for this move to actually take place for us to actually go out there and invade um, the Ukraine. Other than that, this is probably just a sit on your hands and waiting. But there's a lot of money to be made of this trade if you can catch this move at the right time there as well. Now, that's all from my side, and as always, cheers for years.